Hello and welcome to Pro Trader Strategies market commentary for Thursday, January the 24th. My name is Eric Wilkinson, and some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we are here to teach you some different strategies you can then implement into your portfolios, but please do that in your own way. Also, remember, past performance of any trading system or methodology is not necessarily indicative of future results. And having that out of the way, let's get it on with some economic data. Across the pond, we got those flash PMI numbers I spoke about yesterday. First off, we got French flash manufacturing PMI coming in at 51.2, higher than the expected 50, which now keep in mind, anything with these PMI numbers, Purchasing Managers Index, above 50 is expansion. Anything below 50 is contraction. Last month in this French manufacturing number, we got contraction. It was 49.7. That's was not revised. So nice to see this number come back above 50 as expansion. But then we saw in the flash services PMI for the French sector came in at 47.5, expected to be 50.6, and they revised last month's number down from 49.6 to just 49, so a slight revision even lower there. Again, below 50 is contraction. Then we move over to German flash manufacturing PMI, came in at 49.9, expected to be 51.4. No revision to last month's number, but something to note with this number here, this 49.9 is a negative reading. First time we've seen it go below 50 since back in 2000, and I believe it's almost all the way back to 2013 was the last time we saw a negative number. Pretty hard to tell, but it could have been closer to November of 2014. But at the end of the day, first time we've really seen, especially Germany, going into a recessionary number. That is a sign of recession when we go into those negative numbers. And the manufacturing side, German being the leader of the European area, France being one of the second ones, and then the rest kind of follows suit into a group, if you will, and that comes in there just flash PMI for the European region. But let's talk about the flash services sector for Germany. Came in at 53.1, expected to be 52.2, and they revised last month's number down from 52.5 down to 51.8. So that negative revision almost wipes out the positive impact of this economic data point today, the new release. Then services manufacturing PMI, flash manufacturing PMI for the European region, excluding Germany and France, came in at 50.5, expected to be 51.5, and then the services PMI came in at 50.8, expected to be 51.5. So both a miss on there. Nice to see the rest of the European region staying in positive territory on expansion. Germany and France slipping a little bit there is not such a great sign moving forward. And then we move back over here to the United States. We got unemployment claims coming in at 199,000, expected to be 219,000. Less claims means it's expected that most people are finding those jobs that they're looking for. And then we got our own flash PMI numbers as well, but we more look at our ISM, which is the Institute for Supply Management numbers. This flash manufacturing, because I'm doing this video a little bit earlier today than normal because I have jury duty that I have to go to. So I want to make sure you guys get some of these economic data points and what I'm seeing in the overall markets. I'm not doing a whole lot to my portfolio other than trying to get rid of the last thing that I really have in there right now because it's too difficult to really manage while I'm really out of pocket all day. All right, let's talk about crude oil futures. They are moving slightly higher today, but again, right there at that, $52.50, that's where I'm looking for value, somewhere between $55 and $52.50 for crude oil. I think that's the sweet spot, especially where the economy is right now. We start seeing this economy slide even worse, more recessionary, if you will. We probably should see crude oil start coming off as that demand comes off for crude oil. Anytime you start moving into a recession, you start seeing lack of demand for crude oil. Gold futures continuing to come off, staying above this Fibonacci, and it's really fighting tooth and nail to stay above this 61.8 Fibonacci. I expected that to really kind of roll over, but now we're starting to see this 50-day and 200-day moving averages cross. That is a bullish sign for gold right now. So when you have that crossover, that is a longer term move ahead. I'm kind of fading that at this point and expecting this to roll over, but you can see anytime they cross over here, that became very bearish. Now we've crossed over to the upside. That should be very bullish. I have a bit of a conundrum here. I thought that it was going to roll over into the lower 1200s. All of these two things, where this is really acting as a lot more support than I expected it to hold. We've got the 50-day and the 200-day crossing over. I have to look at it like those are two pretty bullish signs for gold. I have no position, don't expect to add anything right now, just kind of keeping an eye on it and trying to figure out what directional move it's going to make. To me, it feels like it should go down, but the market and all the technicals is making it look like it really wants to go up. All right, bonds moving higher by slightly better than half of a point. You know, we've talked about this. Interest rates are probably going to remain steady for the rest of 2019, especially when we're starting to see economic slowdown over across the pond now. We're starting to see those guys slip into negative territory, which is recessionary. We need to have several numbers in a row to really kind of solidify something like that. But I've been talking about this for about 4 or 5 months now, that we needed to have the Fed stop raising, actually probably about 8 or 9 months. Fed needed to stop raising rates and take a breather a little bit earlier than this. They've gone too far. The market is really starting to pull back. You raise interest rate, you crimp spending, try and slow the economy down, and that's what they've done, and maybe even put us into a recession. All right, VIX, trying to discern where we're going to go today as the markets have been sliding the last couple of days. Real good strength late in the day on all of the markets. You know, that is very bullish. When you get all that strength coming in, that's the retail and institutional investor coming in at the end of the day supporting those markets. So that is a bullish sign. Still feels a little bit heavy, like we might correct a little bit more, put the thumb screws on some of these guys trying to get in early, test one of these lows like the Fibonacci, the point of control value area low, something like that, I think may be tested once again just to shake out some of those really weak hands. Then we got the Nasdaq again. You can see late in the day, nice big rally. Still ended up negative on the day, but you know the candle makes it green because we closed higher than where we opened. Today we're starting to get a little bit of a move higher. And really yet to be seen. Short-term bullishness in the market. We still have a ways to go to get through some of this overhead resistance. It's going to act as resistance again like it did the last time before we were able to get back up near that point of control. Then we got the E-mini S&Ps. Again, finished higher on the day yesterday than where we opened. So it makes that bar look green, but very good strength at the end of the day. Today we're seeing some strength again. It's just not a whole lot of volume behind it. As we'll see here on the daily chart, each blue section is a day section. Each candle is a 30-minute segment. And, you know, interestingly enough, as the market moved yesterday back and forth, it didn't really seem like it. But as you can see, shaking out, yesterday was an inside day. So, you know, today is sizing up as another inside day. So really starting to get complacent right here at these levels. So it may take a lot more to get us out of this little area than where we are. More and more bearishness coming into the market, though, kind of fighting off these technical moves to the bullish side. So we've got a real battle going on with technical versus fundamentals right now. IWM, you know, yesterday wasn't really close. Today being gone all day, I'm going to put this order in to try and get out of it. If you guys remember, this the IWM trade. I did it basically as a portfolio adjustment when my deltas were getting really long, but now this is the only thing in my portfolio for the most part. And I have on the February 152 calls in there, and I originally sold those for about 72 cents, I believe it was. So I'm trying to buy them back right now for 31. It's trading 20 cents higher. But if we get a bit of a pullback down to the, sell off towards the lows of the day, I think I'll be able to get filled on this. So I'm just going to let it work throughout the day to try and get out. That's it. Sorry, you guys, I haven't been super active, but it's very difficult to trade from a courtroom. As a matter of fact, you can't have your phones on. So I don't even know what the heck is going on in the real world during the day until about noon. I'll try and stick with it. We're not going to be having that webinar today. Sorry, I've been planning on it, but these guys pulled the trigger and said that I can't do it. And so I'm going to have to go and fight for justice. All right, that's about it. I'll be back tomorrow. So, stick around and we'll see what can happen. If you can't take that, take it easy.